What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some just general analysis on where the market is right now, and we're going to look at some charts, we're going to look at some statistics, and we're going to get a better perspective of where we are in this market cycle and where things are going to go over the next 6 to 18 months. So first thing we're going to look at is some stats on bull markets and bear markets. So for bull markets, on average, they go up 114% for the duration of the bull market. 78% of the time, we are in a bull market. Bull markets on average last about 2.7 years. And then for bear markets, I found two different stats. I think it's because the indexes they differ in how volatile they are. The S&P is less volatile and the NASDAQ is more volatile. So the NASDAQ is going to move more when things go up and it's going to move more when things go down. But on average, the bear market will last anywhere from 9.5 months to 1 year and 3 weeks. And we are right in that range right now. We're actually ending up about to pass that range because right now we're at 11 months and 1 month from now we'll be at the 1 year mark, right? So that's where we are with that. That gives me more reason to believe that we are near the bottom and things are going to start flipping pretty soon. The other statistic is that on average, bear markets will drop 36%. Right now, the NASDAQ is down 33%. And so we're pretty close to that mark. We're pretty much on the average because November 14th of last year, we hit $404, let's say, for this index. And then right now, we just hit 260 last week, but right now we're at 270. So we probably actually went down a little bit more, probably closer to 35%. So there's that. Then we have that half of the market's strongest days happened during a bear market. This is very important because this is another reason why you should be investing during times like these. And if you try to wait it out and say, okay, I'm going to wait till things get back to normal and I feel a little bit safer to invest. Let's say you want to wait a couple of weeks until things start going up again. A lot of people wait even longer. A lot of people wait, months and months. And once people are making money and things keep going up, then they buy in. But by then, if you wait months until you see the bull market, you're going to miss out on all the gains. That could be a 2x on your money that you missed out because a lot of these stocks are going to fly up super fast. Even right now, at the time we're in, pretty much everything is bottomed. There's been so much selling pressure on everything. Everything has been hit hard. Even the huge companies like Facebook and Google and Netflix, those companies have been hit hard. We just saw Netflix shoot up. I think it's up over 13% today. And so it's stuff like that when these companies come out with earnings or they come out with a little bit of good news, that's going to shock the market and people are going to jump on that and it's going to fly up. Just like Netflix said this morning that how they were losing subscribers last quarter, that flipped this quarter and now they gained over 2 million subscribers. So things like that can happen. I think the same thing's going to happen with Facebook because if we look at Meta right now, we can see that Meta has been, for how major of a company that is, it's been hit way too hard. So if we look here, we can see that Meta is at a 5-year low. I believe it's about $130 a share right now, 135. So yeah, things just aren't looking good out there. If we want to look at PE ratios, look at valuations, we can see these are forward PE ratios for the S&P indexes between large caps, mid caps, and small caps. So here's the last 25 years, right? And we can see large caps are trading at a forward PE of 15.8, which is pretty much right in average, right around an average. So large caps can pretty much, they can stay where they are. When I think of that, I think of companies like Adobe, Salesforce, Intuit. Those are big cap companies that trade at bigger valuations. I don't think a Meta Platforms would fit into this because Meta is trading at a PE of 11 right now. So they're on the lower range of things. But that's for large caps. For mid caps and small caps, we can see it's trading at 11 and a 12 for PE, which is incredibly cheap. And over the last 20-something years, you can see it rarely trades at a PE of 11 or 12. What did I do? And so that makes me think this is not going to last very long. Now, I remember thinking that 4 months ago, I remember looking at the small caps here and saying, oh, they're trading at a PE of whatever, 13 or 14, that can't last long. And now we're down even more to 11. So can things get worse? Yeah, things can get worse. And maybe they come down to a 10 or a 9, right? But just think about the odds and your chances of that happening. Because look at this chart. This is for over 20 years. It's traded at anywhere from 15 to 20, right? That's normally the range. It normally is right around 17. And when it does go outside of that range, let's say, at this point here or at this point here, it only lasts for a couple of months, right? It doesn't normally last for a whole year or multiple years. It's for a couple of months and things switch back to normal. That's what's going to happen right now. In the next 6 months to 12 months, we're going to see this line here shoot up this way, come back to normal. So we're going to see a lot of upward pressure from small caps and mid caps. Large caps, maybe. It depends. Large caps, they could go up, but we'll have to see. They can't get too much out of their range. Then the next thing to look at here is the fear and greed index that CNN does. And as we can see here, a year ago, we were at neutral, right? Then a week ago, we were at extreme fear, and now we are just at fear. So it's getting a little bit better, right? But everybody out there in the market knows that every stock has been sold off an incredible amount, and there's just really not that much more down it could go. So that's why I am bullish on the market. I'm always bullish and optimistic on the market, but I just think that things can't last that much longer. I mean, or you can compare our bear market to other bear markets like 2008, like 2000, and let's say for the 2008 crisis, the NASDAQ went down like 50% or something, right? And right now we're down about 35. We hit 35%. So could things go down maybe 40, 45%? Yeah, it's possible. But are things as bad now as they were back in 2008? No, I don't think so. Because right now we're dealing with inflation, we're dealing with supply chain problems, and we're dealing with a war in Europe. Other than that, that's really our only worries. The other thing to look at here is people will say, okay, we're going into a recession, and why would the stock market go up during a recession? Well, the statistic is that the stock market bottoms on average 6 months into the recession. Okay, and our recession right now is a little bit different because it's not a traditional one where, let's say, unemployment goes super high and GDP falls too. Right now, we had two back-to-back quarters of negative GDP, which some people will tell you is a recession. Other people will say no. It has to be more than that. It's not just about GDP. It needs to be a better measure of the overall economy, and a big part of that is the unemployment. So right now we're still at low unemployment of only 3.5%. But let's say in 2023 we see unemployment go up, and let's say unemployment goes up, but that doesn't mean that the stock market can't go up too. Because normally what happens is the stock market will fall months and months before the actual economy gets worse. And so that's something you have to consider here is just because the economy, let's say, is going to be bad in 2023, that does not mean at all that the stock market can't go up. So that's another important thing to consider. But yeah, those are the reasons why I am bullish on the stock market. And let me know what you guys think. Comment down below. Thank you for watching, and I'll see you in the next video.